Dear shareholders of Inwido, my name is Henrik Hjalmarsson and I am the President and CEO of Inwido. And I'm here in the context of the 2021 Annual General Meeting to give you a short summary of Inwido's 2020 as well as a look into the world of Inwido. But first, to those of you who are new to us, Inwido is a leading window group in Europe with a clear market leader position in the Nordic countries, as well as a strong presence in the UK and Ireland. We had sales of roughly 6.7 billion SEK in 2020, with an operating EBITDA margin of 10.9% and roughly 4,300 employees in the countries you see marked in dark blue on the right-hand part of this slide. You can also see on the map in white dots the production locations we have in Northern Europe, and the brands you see on the bottom part of this slide are the brands that we market and sell across these geographies. Summarizing 2020 is obviously very difficult to do without talking about COVID-19. For us, battling COVID-19 was one of the key themes of the year, as was growing with consumer sales. COVID-19 obviously turned our priorities, our ambitions, and our initiatives upside down early in the year, but I'm happy to say that it really proved our decentralized organization with strong local accountability and local authority, and we've managed it well overall. 2020 was also a year when we grew our margins and achieved organic growth. As we closed the fourth quarter, we closed the seventh quarter in a row with increasing margins, as well as the third quarter in a row with organic growth. We also had good consumer segment growth throughout the year, not the least with our business unit e-commerce growing nicely and showing that some of the conscious investments we've made there over time is really paying off. I'm happy to see that we had continued good operational execution as well as good cost control, and that we increased the market shares in our key geographies throughout the year. It's hard also to summarize 2020 without talking about COVID-19. So how did it develop for Inwido over the year? Well, it's obviously been a testing time as it has been for many others, but as I mentioned, overall I think we managed it well. Partly because very early on in the pandemic, we set 3 clear priorities which guided us in our efforts fighting the pandemic. Number 1, and most importantly, was to keep our employees safe. Number 2 was to contribute to limiting the spread in society. And number 3, as important parts of their local societies, to keep our businesses running as far as we could safely and responsibly do. These 3 priorities have guided us through this year, and overall they've helped us tackle this pandemic in a responsible and good way. The main impact we've seen has been with higher absence levels, which has impacted particularly the Swedish units and has done so in the form of lower production efficiencies. But we've obviously also seen impacts from more specific events, like the shutdowns in the UK and Ireland, and also in our case, the shutdown of 7 municipalities in western Denmark in the fourth quarter, which impacted both production capacity as well as production efficiency. The long-term impact of COVID-19, I would say, remains hard to predict because we don't know exactly how societies will react when they open up again. But we monitor the situation closely and we remain ready to take action if and when we need. I also want to take this opportunity to extend a big thank you to all the Inwido employees for their hard work in battling COVID-19, being able not only to keep colleagues safe, but also keeping our factories running and continuing to serve our customers. Thank you very much. If we looked at 2020 in terms of numbers, well, sales grew organically by 2% to just shy of 6.7 billion SEK. Our operating EBITDA grew nicely to 729 million, with a 1.2 percentage point improvement in operating EBITDA margin from 9.7% to 10.9%. Operating cash flow remained strong throughout the year at just above 1.2 billion SEK. And the board then proposed a dividend for 2020 of 4.5 SEK per share, which is just above 50% of our EPS. Looking then at the progress towards our financial targets, excluding the dividend, which I just mentioned. Well, as many of you know, our growth objective is to achieve organic growth or exceed organic growth in our existing markets, combined with then select acquisitions and initiatives in Europe. I'm glad to see that with an organic growth of 2% and an actual growth of 0.8%, we took a good step in the direction towards long-term profitable growth through the year. In terms of profitability, our target is to achieve an operating EBITDA margin of 12%. Perhaps not being able to reach this target in years of more difficult market conditions, but then taking action to move in that direction. I'm happy to say that also in this area, we took a good step in the right direction, coming in at 10.9% and taking a step then towards our long-term target of 12%. Lastly then, when it comes to capital structure, our target is, excluding temporary deviations, not to exceed a net debt to EBITDA of 2.5. We closed the year at 0.9, excluding IFRS 16, which is then considerably below the target, and that means that we have a strong balance sheet with good readiness to make value-creating acquisitions. Sustainability is obviously a key focus and priority for us, and I'm really happy to say that we made progress on 7 of our 8 sustainability KPIs through the year. The only exception being sick leave, which was then obviously negatively impacted by the COVID pandemic. I'm particularly happy to see the progress we made with all the actions we're taking in terms of reducing our carbon footprint, being able to reduce our carbon dioxide emission in kilos per 1,000 wings by 7.1% in the year. I'm also happy to see that we made progress in terms of making Inwido a safer place to work with a reduction of lost time accidents of 16.4% in the year. I'm also happy that during the year we launched a new sustainability ambition in terms of an ambition for a reduction of our carbon footprint. That is to reduce our carbon dioxide emission by 50% by 2030 and to be carbon neutral by 2050. This is obviously a challenging and ambitious statement, but I strongly believe that us as leaders in the industry and as a big corporation in general have to take a strong leadership in this aspect. So what is it then that guides us in our efforts to develop and improve Inwido? Well, first and very importantly is our vision, which is to improve people's lives indoors by offering the best customized window and door solutions while developing our employees and generating sustainable shareholder value for our shareholders. Based on this, we also have the 4 cornerstones for sustainable and profitable growth, which are strategic guidance for us as we continue to develop and improve our business. The first one is that a decentralized structure drives customer and results focus. We believe that decision-making as close to the customer and as close to your daily operation as possible generates agility and speed to respond to changing circumstances, but also that a close focus on this drives a focus on results. The second one is a focus on the consumer-driven market for profitable growth. We've shown over time, and we strongly believe that the consumer market is attractive, and we continue to take efforts to strengthen our position in this segment. The third one is sustainable growth driven through acquisitions. In fact, Inwido was built on 50+ acquisitions over the past 20+ years. And we strongly believe in the ability to continue with value-creating acquisitions also in the future. And the fourth one is that synergies drive structural improvements. We strive strongly for synergies within areas such as purchasing, technology, and leadership. And we see that these improve our businesses and drives profitability in them. How do we then manifest this in terms of a model for creating value? Well, we talk about our virtuous cycle to drive shareholder value, or half-jokingly, Inwido's Wheel of Fortune. These are 5 key elements that are the basis for our value creation model. They ensure that we drive long-term, cost-efficient customer value as well as employee value and hence shareholder value. Firstly, as I mentioned before, we drive efficiently through synergies on sourcing and technology. By coordinating purchases, we can simply save money, which improves the profitability of our businesses. Secondly, we believe in a decentralized accountability with business focus, leadership, and drive. We believe that staying close to the customer in your daily operation drives focus and improved decisions and hence execution. Thirdly, we believe in a strong performance management and KPI structure and that drives the right behaviors. By being very focused on the results you generate, you tend to increase and improve those results over time. Fourthly, which we've shown very much over the past 18 months, is that capital efficiency and allocation is important. By generating strong cash flows, we create room for investments for growth and for M&A, which leads then into step number 5, which is value creating M&A and investments for growth. We believe that to be a strong driver of continued growth of shareholder value for Inwido. In terms of M&A then, so where do we stand? Well, we continuously increased our efforts in this area in the second half of the year after having been a bit more cautious early on following the hit of COVID-19 pandemic. I'm really happy, therefore, to say that we closed the acquisition of MV Center Oy, or Metallitie Välimäki Oy, as they trade on a daily basis, a leading Finnish provider of aluminum and steel doors, windows, and glass facades. And we did that early in 2021. We have several discussions ongoing with interesting targets in our focus geographies. However, given the travel restrictions as well as the meeting restrictions posed by the ongoing pandemic, it does take a bit longer than what we'd normally see. Looking then into 2021, what do we see? Well, we obviously entered 2021 with a strong order backlog, combined with a robust development of the consumer markets, somewhat continued recovery of the industrial markets, as well as some rebound potential in the UK and Ireland following the COVID-19 shutdowns. We see that supporting demand and sales in the short term. On the flip side, we see that the inflation that we've seen on some of the key input materials runs the risk of impacting margins slightly in the short term, pending that our price increases take full effect. And we also see that the medium-term outlook is a bit more uncertain, as the exact impact of societies opening up again is a bit hard to predict. However, given this, it's really pleasing to see that we got off to a strong start in 2021. We reported all-time high Q1 sales and operating EBITDA, supported by good growth as well as good continued cost control. Sales grew organically by 18% to 1.644 billion SEK. Our operating EBITDA strengthened considerably to 121 million SEK. The operating EBITDA margin strengthening by 4 percentage points to 7.3%. We saw a continued good order intake, 15% up, which meant that we closed Q1 with a very strong order backlog, up 43% from the same time last year. And with continued robust cash flows, we reported a net debt to operating EBITDA excluding IFRS 16 of 0.9, which is considerably down from 2.3 last year and leaves us with a strong balance sheet ready for acquisitions and continued investments for growth. What are then the key priorities for 2021? Well, as we battle the remaining parts of this pandemic, waiting for the vaccination program to roll out fully, the number one priority is to keep our employees as safe and healthy as is possible. Secondly, we want to continue our investments for e-commerce growth. E-commerce had a good, strong growth year in 2020, and we want to continue that momentum into 21, and we'll continue to allocate funding and resources to make that happen. Number 3 is, I mentioned earlier, is an ongoing screening of and dialogue with select acquisition targets, which we will progress in the pace that we can, given the current restrictions posed by the pandemic. Number 4 is to continue the margin turnaround in Business Area North. Therefore, it's very pleasing to note that in the first quarter of 21, all business units in Business Area North improved their profits year over year. And lastly but not least, we will continue with our focus on responsible and strong execution and good cost control, being prepared for a potentially more negative development going forward. With that, I want to thank you very much for your attention. We look forward to a very exciting 2021. Thank you very much.